All right, guys, it's Paul Singh, the Market Speculator with bullsonwallstreet.com. Today, we're going to talk about the semiconductor sector and my take that I think this sector might be ready to break out and we could get some good early trades in this area here. So let's talk about why we think that. First of all, it has been lagging. So let's look at the chart here. You can see there's been a lot of back and forth. This is a sector that has led the market for a long time. But this year, especially more recently, has been really lagging the overall market and specifically the Qs, which it generally tends to lead. So if we look at the Qs here, this is blue line here is QQQ, the NASDAQ 100. And as we can see, and even more recently here, it was basically keeping pace at some points, leading at some points not. But since late summer here, there's been a divergence. When we had this pullback in the market, the Qs recovered and semiconductors did not. They've basically been in this range, almost looking like a potential breakdown here, especially when we look at this old volume pattern back in here. But more recently now, lagging, not keeping pace, we would expect, if we look at the Qs here, we would have expected semiconductors to be up here, actually getting up to highs here, which obviously they are not. But there are a few things I like now, and we'll go through these in a second here. But remember also, when we look at SMH, we look at this for our analysis, but I always trade the leveraged ETFs, and we'll go over that in a second, which is going to be SOXL. But why do we like it here? First of all, we are making higher lows. We've had 1, 2, 3, 4 higher lows. That's a good trend. At least none of these pullbacks have actually broken down below the previous low. That is what I was expecting, and I was looking to short some of these things, but we never got those triggers. So that's one positive here. The other positive is more recently, we had this strong hammer here and it did not fail. It has continued. So we had the hammer here and then we bounced, and now we've cleared a range, which is the 9 EMA. So that's another positive. And then finally, we are seeing some decent volume here. We had the big green volume here. Now, these red spikes may look a little concerning, but when you look at volume patterns, and most people are going to look at the size of the red bar versus the green bar, we have to analyze that a little more in depth. And here, what we'll notice is a number of these red bars are actually where the index reversed. So when we see a big red bar here at the reversal point, that's actually a positive, not a negative. Where I would get concerned is if the big red bars are coming in as we're in a trend down, and we're not seeing that. Big red bar here when we reversed. So those are positive. So I actually treat those almost like green bars. So I do like the makeup of the volume pattern in here. So definitely, and then finally we have good risk reward. If the analysis is wrong and we end up taking a loss on this, let's say you got in at 107 here, we don't need to use that loose of a stop. If it breaks down below the 9, we know the sector is failing. So we can place a stop down here, maybe around 106, maybe a little looser, and have a target up here around 112, maybe even 114. So we're talking about risking, let's say 2 points for the potential of a 7-point move. So we're looking at 3 to 1 on this. And that was just if you trade the underlying ETF. So really good risk reward. You're looking at least 3 to 1. And if you use a little bit of a tighter stop, maybe even 4 to 1. So it kind of checks all the boxes of things I like to see when I'm looking at one of these sector plays, especially getting in early when other people might be ignoring and it's not in favor in the market right now. And let's look at SOXL. So this is the leveraged ETF. We could enter today at 164, place that stop, we'll say around 158. Let's say a little looser, let's say 157. So we're risking about 7 points. Now, if we have a target here at this range here at 186, we're looking at 22 points. So risking 7 to get 22, we're at 3 to 1. And if we're going for the highs, let's just say up here at 200, now we're looking at a 35-point move, 7-point risk. We're talking about 5 to 1 here. So Really good risk reward on this thing. So you can forget about all the stocks and just trade the leveraged ETF, and you're going to get a really good risk reward. You don't have to do too much analysis. But let's go ahead and look at a couple of other stocks. AMD has been on fire. And if you go through the sector, there are a lot of ugly charts in there. So we're trying to pick out the best ones that are at least keeping pace with what the ETFs are doing. AMD, that is actually a little extended, but if our thesis is correct and semiconductors move, we wouldn't be too concerned. We expect this one to lead again. Enter here around 3150. Maybe use a point stop, and we could put a target range here, maybe around 6. We're looking at 4 to 1, 5 to 1, 6 to 1 on this setup. So really low risk, high reward, and that's what we're going to look for on all these setups here. OLED has been really beaten down, an ugly chart, but look at this volume pattern. Big green here, big green here. If it can clear the 50-day moving average, that would be good. You could enter here around 123, 124, and sky's the limit for where this thing could go. But let's just say, be conservative and say this open gap here, we're looking at over 20 points, and risk is only going to be about 5 or 6 points. So again, really good risk reward. We're talking about 4 to 1 on this. And then if you went even higher and went for a bigger trend move, then obviously even better risk reward. NVIDIA has been leading the sector overall and is actually even leading the Qs, which the sector has not done. It is pulling back here, so we would need to show strength. Maybe a break of the 9 around 272, and then we'd play for a breakout. And then finally, Qualcomm, a little bit of a slower moving stock, but still has been leading the sector as long as it holds a 9. Probably not what I'm going to trade, but I wanted to put it in here because look at the volume pattern. So if you like the slower, bigger stocks, maybe trade options, and you can trade the options on this thing. But overall, it is showing relative strength compared to the sector. So if I was going to go with something, it would probably be SOXL. Let's just pull these up real quick. The ETF SOXL, the stock OLED, or the stock NVIDIA. So those are, I think, the 3 best plays for this space here. All right, guys. So next week, I'm going to go over a new sector and a new strategy. And remember, you can sign up for the trade report where we've got the daily focus list, daily analysis. So check that out if you want. Otherwise, I'll see you guys next week.